Welcome to FX Options University. FX options are a low-risk alternative to hedging currency moves in any market condition.
Okay, and I believe today, I got my other charts up over here. I think the dollar was just a little bit weaker against the British pound, so we really haven't given back much of this rally yet. The Canadian here has, again, been more or less range-bound the most out of any of the currencies. Here's a long period of time where we went sideways, 5 weeks, or 5 months actually, 3 months here. This was another 5-month channel up here, okay? And we were waiting for some kind of a test of a lower support level down here. So the strategy was to wait for a pullback to this support area to initiate a position. Again, when we're in between support and resistance areas, what I usually like to do is pretty much let the currency alone and look for better opportunities for trading range strategies, okay? But you could see on a daily chart how we actually came down and made a nice little support level here and a nice little resistance level here, and this actually lasted for almost 2.5 months of sideways trading in between that channel. So this currency could, it could go flat. Our next projected place to take a trade was this support level here, followed by this one here for any kind of a counter trend long. Okay. And notice we ended up going from all the way here, and then we finally broke down and actually tested this lower channel here. And we're doing a little bouncing off of here right now. Now, remember my friend who taught me what I'm sharing with you today, he would explain to me that there was a basket of orders on his desk, and when price came down to the basket, more and more of the buy orders would be getting filled. And so as you see on this chart here, the first time there were a lot of buy orders, the second time a few, the third time not quite as many, the fourth time, and then finally we filled the last buy order at this price level, and price broke through and actually went lower in search of more buy orders. Unfortunately, in the spot market, quite a few of our students did get stopped out on that trade because the Canadian actually, we made a new low here. So with the FX options, that's really not going to be a problem. You can always cut the trade off. If you lose 50% or if you break these lows on a closing basis, then you could wind out of that trade. All right. So I'll tell you what, we're going to fast forward here. Here's we are rallying. So any call purchase down here or any kind of a spread strategy is starting to work. Any kind of a, you could buy these calls here. You could sell the puts below here, buy a put for protection. You could do all kinds of different spread strategies. You have the abilities here, right? And again, you could also, if you're a position trader, when you get ready to break out of these channels, if you want to stay with that position, you can close your long position. And then with very low risk, you can initiate a short position to take advantage of the possible turnover into a new downtrend. Okay, so that was just a long put strategy. Your Swiss franc, we'll try to buzz through so that we don't take up too much of everybody's time here. It's another currency that kind of has been going in more of a trend move. The Swiss against the dollar hasn't based very often, but it did give you a few opportunities here inside of a channel before it broke out and made new lows. And this is the only support area on this chart before we actually make new lows against the Swiss franc. And we already tested the support area one time last year before the big rally. So as you can see, we did bounce here, and we did have some channel trading for a few almost 2 months. But once we broke below this support area, we pretty much got down to the bottom of the chart in a hurry against the Swiss franc. So you can use this support area at around 102 or so. Obviously, these two similar highs right here would be your target if you wanted to open up some kind of a trading range strategy. Understand that depending on how aggressive either the buyers or sellers are, you may extend the top of the range. You may extend the bottom of the range. You really don't have any solid resistance until you get back up into this area. So this could be one of those things where if you did buy a long call to start it off as being some kind of a trading range strategy, if you can keep plowing until you get up to here, that might be the top of your range. So there's no reason to really take the trade off if it's strictly just purchasing calls. Okay, and that's the picture of the chart now. Okay, this is the new Swedish krona. It just made a double bottom, so obviously there's a lot of double bottom traders out there. Here's going to be your resistance area if you want to buy a call. If you do buy a call here, this could be one of those currencies where you could actually do some kind of a married situation. Okay. On your daily chart, it's a potential double bottom. Doesn't really cost you a lot to find out if you're right or you're wrong. Obviously, if the dollar index is in support, all the currencies against the dollar are going to rally to some degree or another. I believe, if I'm looking at my quotes today, that one actually closed at 102.19. Oops, no, that's a Swiss franc. 69.73. So we actually managed to close from that double bottom right about here. So already, just because it was a double bottom and an opportunity to buy this one, you're doing okay. And this will be your first target, followed by your resistance above the trading range. Okay. All right. And of course, the yen. This was back in February where it broke out of this channel. This is what we've been doing ever since I've done these webinar series. If you start the base like this on a weekly chart, your 30 weighted moving average gets close to the trading range. You can buy calls at the bottom of the range, buy puts at the top of the range. If you're expecting a breakout to the upside, you can buy more calls than puts up here. You can certainly sell your puts if you do make a high on that particular chart. You can stay with this trade for some kind of a trend move. And there you go. We actually broke out. And then we went sideways again. You can see the nice big channel on the dollar versus the yen. And then, of course, the yen strengthened again. And our strategy, if I remember correctly, was back on 7.3, sell the puts below 90, sell the calls above 102. Of course, that would be some kind of a right strategy that you may or may not be able to do. And if you have the margin requirements, you'll have to check. Make sure you check. But both of these currencies were actually pretty weak. For some reason, though, the yen, maybe it was the evil speculators, the yen did have a nice rally, and it did push down to this 90 support level. It did bottom at around 88. So now you can trade the 90 to 95 range on this chart. And of course, just watch a few of the strategies, because I'm running out of time here. Just watch a few of the strategies that are recorded for how to actually do some kind of a butterflies, broken butterflies, condors. Be creative. What I call them are synthetic spreads. We had these support levels and we bounced through each one of them. This is why I said go outside the ranges here. You know, write your puts below here, write your calls above here, stay outside the range. This absolutely is the strategy that the index futures, all the buy right strategies and all the right strategies in the index futures, this is exactly what they do. They go way, way outside here, and as long as price stays inside here, they just clean up. And this one, even though it did extend the ranges up and down, it's still very much a range-bound currency. Got up to the 100 here and extended the lows. Okay, and there we're just bouncing off here in September. And now we just made a new low, and we've rallied up into this 92 area in a hurry. The yen's starting to weaken against a lot of the currencies, so the yen on the weekly chart topped out. So again, I expect to see some strength for the dollar and all the currencies against the yen for a while. Okay. And again, these are the strategies I would use. You don't have to do anything naked. Of course, you could do any of the spread strategies. And there's so many great webinars that I've watched. It all depends on if you are looking for profit limited and loss limited, if you're moderately bullish, moderately bearish, if you're neutral. Of course, if you're neutral and you're looking for a big volatility breakout in one direction or another, you could do straddles and strangles, right? If you're looking for profit limited and loss not limited, of course, I don't recommend that, especially unless you really, really know what you're doing. There's no point. So there's plenty of strategies here that you can learn, and plenty of webinars that are on the website to help you with that.
Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts.